My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/beststockstrategy. The Wealth and Health Podcast is brought to you by beststockstrategy.com.
Options trading for beginners, your ultimate step-by-step blueprint. Stop gambling, start winning. Learn how the top 10% of options traders create consistent income by thinking like the house, not the gambler. It's important to focus on strategy because with your strategy, you can apply it to any stock. So make sure you watch this entire video because it's definitely going to improve your trading and overall returns. Wake up call. The casino secret they don't want you to know. Here's the harsh truth. 90% of options traders lose money because they're playing the wrong game. They buy lottery tickets, guessing both direction and timing. That's a sucker's bet. The winners, they stopped acting like gamblers. They started thinking like the casino. The house always wins because they control the odds, collect premiums, and let probability work in their favor. Today, you're going to learn how to become the house. Approximately 90% of traders lose by buying options. What is an option? Finally, simply, forget the jargon. An option is just a contract between two people. Call option, the right to buy a stock at a set price. It's like reserving the right to purchase something later at today's price. Put option, the right to sell a stock at a set price. It's like having insurance that guarantees you can sell at a certain value. Most beginners buy these contracts and lose money. We're going to sell them and collect premium like the pros do. Strategy 1, the free ride, which combines the upside potential and taking a directional approach while also financing the upside potential so that it doesn't cost you anything. Imagine you want Apple stock exposure, but it's $250 per share. Buying 100 shares equals $25,000. That's expensive. Here's the genius move. Use a call spread instead. You buy the upside potential for a fraction of the cost, maybe $500 instead of $25,000. This creates massive leverage with defined risk. You're going to pay $500 for similar upside exposure, and the result is around 50 times more efficient capital usage. One small typo here, it says unlimited upside, but because we're using a call debit spread, then it's not unlimited, it's going to be capped. However, you're still going to be able to participate in a lot of the upside. Strategy 2, how to make it free, the financing hack. The secret sauce is, how do we pay for these upside calls? Simple. We sell puts on stocks we actually want to own. We don't gamble. We trade stocks like Nvidia and Microsoft because we know that the market just doesn't go up. Instead, when it pulls back by around 5 or 10%, those small cap tech and AI stocks, which have gone up hundreds of percent, are going to then give back the majority of those gains. So we tend to trade stocks like Nvidia and Microsoft. Selling a put means getting paid today to promise you'll buy a stock at a discount later. It's like a retailer paying you to window shop. We use that income to finance our call spreads. The result, a free ride to the upside. 1. Identify quality stocks. Choose blue chip stocks you'd love to own at a discount like Nvidia, Microsoft, or Apple. 2. Sell put options. Collect premium income by selling puts below the current price. Usually we like to sell puts at around 10 or 15% below the current market price. 3. Fund your upside. Use that premium to pay for call spreads on other opportunities. Pro tip, the cash hack every pro uses. Amateur move, cash sits in brokerage account earning 0% interest. It's dead money doing nothing while you wait for opportunities. The pro move, put cash into Treasury ETFs like SGOV or BOXX. You can earn around 4% risk-free and you can still use it as collateral to trade options. This is how professionals get paid while they wait. Your cash should always be working for you, never sitting idle. The other thing is that BOXX is tax advantaged. So you're going to end up saving money in taxes by buying BOXX as opposed to SGOV. Protection, the umbrella strategy, sleep well at night. Markets crash, it's inevitable. Most traders panic and sell at the bottom. That's exactly when wealth transfers from the impatient to the patient. Our move? Buy put spreads when markets hit all-time highs. Think of it like buying cheap umbrella insurance when it's sunny outside. When the storm hits, you're protected. When others are panicking, you're positioned to profit. Remember that sell-offs are opportunities for disciplined traders. In 2025, we were assigned shares of Google at around $160. We are up over 100% in our Google position in less than 1 year with relatively minimal risk. We're disciplined. That's why we were able to buy Google at $160, as opposed to being forced to close out the position for a loss. The best time to buy protection is when nobody thinks they need it. That's when it's cheapest. When VIX is trading below 15, that's the best time to buy portfolio insurance. Daily routine, the daily income filter, 5-minute check. You don't need to stare at charts all day. Professional options traders use a simple decision filter. Check the VIX, the fear index. It tells you the market sentiment in one number. The VIX is low, sit on your hands. Options are cheap and it's best to decrease your size and not trade too often. VIX is high, sell options and collect fat premiums from fearful traders. When fear spikes, premiums explode. That's when we collect a ton of income. When fear is low, we still trade, but we're more selective. Simple, disciplined, and profitable. Crisis management, managing the crash, the V-shaped recovery plan. When markets drop 20%, that is when amateurs blow up and pros get rich. Here's the playbook. Don't panic sell your stocks, ever. That locks in losses. Roll your options positions. Extend time and adjust strikes to give positions room to breathe. Wait for the bounce. Long term, markets have always recovered. History proves this every single time. Wealth transfers from the impatient to the patient during crashes. Your job is to be patient. 100% recovery rate. Every market crash has eventually recovered, usually in around 6 to 18 months. Your roadmap to consistent options income. Stop gambling on penny stocks and meme trades. Here's your step-by-step blueprint to building real wealth. 1. Build your war chest. Start with cash in Treasury ETFs, earning around 4% risk-free, or in BOXX because it's more tax-advantaged. Sell options on blue-chip stocks. Generate consistent income by selling puts on quality stocks. Buy protection. Use put spreads as insurance when markets are euphoric. I also like to look at the Fear and Greed Index. You can Google CNN Fear and Greed Index. Anytime that index hits over 75 and VIX is below 15, I would definitely consider buying puts as insurance. Scale systematically, reinvest profits, and compound your returns over time. The golden rule, keep 50% of your buying power in reserves. If you never get wiped out, you eventually win. Subscribe to learn the advanced details of this complete system. If you have any questions, leave a comment below. Please like this video. Let me know your thoughts on these educational videos and content, and I appreciate your attention.
Visit beststockstrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and a review. If you have any questions, visit beststockstrategy.com and send me a message.